Start with Tesla. Why not? Cheaper models. Do you think they'll do it? How big of a game changer would that be as far as the company's financials are concerned?
Hi, David. Good to see you again. It will certainly drive, number of vehicles, deliveries, and things of that sort. What is being pointed out, and it's very important to realize, is that it could continue to weigh on margins because a lower price is going to lower the margins. The margins are already walking a very thin line right now. Even though there's a $25,000 vehicle rumored, as you likely know, BYD has one that is as low as $11,000. So will it solve the problem that Tesla faces, which is that in China, they're losing market share? It may not solve that problem. The problem it could solve, which is quite important, is that the United States has been facing high interest rates for a long time. A lot of people want to look at Tesla's stock as a Elon Musk problem. It's not. It's an interest rate problem. That's why we see the same issues around Apple right now, struggling to keep up with being a high-priced device. And overall, a lower-priced vehicle in the United States could certainly help spark some new sales. Again, the margins would likely continue to remain an issue in that case.
Can you tell us a bit more about what they can do in China? I think it was Evercore yesterday that said, they can't really afford to keep slashing these prices because this is really going to wipe out their earnings in the mainland. Do you think the market is properly pricing that sort of scenario?
Yes, it's definitely the bigger deal because you're not going to be able to replace that anytime soon. However, as AI approaches, that's the piece that Tesla is going to have to execute on. So what we're seeing is a moment where it's a little too early for AI software. As you know, AI hardware has been a huge boom with H100 moment last year from NVIDIA. But AI software, we're not in that cycle right now. And that's what Tesla really, truly needs in order for its stock to resume where it was before the Wall Street darling. And that AI software cycle, if I were to give you my best estimate, would be more of a 2026 discussion. So between now and then, they have a China problem, and how they solve that China problem will not be an easy answer for Tesla.
So Beth, you mentioned if rates are the main culprit why margins have, multiples, not margins, why multiples have compressed and the stock is down, what will be the best determinant whether or not the stock has bottomed as well? Do I look at rates or do I look at margins?
Those two will move together because they have to continue to lower average sales prices to keep up with the higher cost of the vehicle to the consumer. Obviously, the rates make the vehicle more money per month to the consumer. So those two will be in sync. The minute those margins bottom, though, or the minute we start to get a more dovish Fed, this is going to be an excellent buy. This stock is deeply on sale. It's very rare that I can look at a Mag 7 stock that is deeply discounted in the way that Tesla is. If this thing continues to go lower, it's an attractive entry eventually because this company's not going to go out of business. They're an AI leader if you're patient enough. And all of those come together to don't get too cold, ice cold on a stock like Tesla, which is arguably one of the better top 10 stocks in the market.
So certainly there's more room for improvement here. I'm just wondering, given what you're seeing in the Mag 7 right now, it seems like Tesla's the weakest link. Where else are you looking for, in terms of AI contributions to revenue or even capex outlook for AI? What stands out to you among the 7 now?
Yes, I would say Microsoft is a very big report this week. This has always been known as the cloud bellwether. It is now the AI bellwether. And the reason why AI continues to be very important is that this is where the real growth is happening if you look at certain pockets. Outside of that, we're seeing a lot of deceleration if you look very closely. So we want to see Microsoft continue to do what it did before. 2 quarters ago, AI had a 3-point contribution to Azure. 1 quarter ago, it had a 6-point, so it doubled. We're talking about $75 billion segment. If we continue to see that ramping up, I think the market will be very excited to see that from the enterprise segment, from enterprise companies. And then, of course, when it comes to big tech capex, Tesla's report could not have been more bullish in terms of the H100 equivalents and how they grew those 130%. Across the board, big tech has those big pockets and is fueling a lot of this growth cycle that we're in terms of AI.
Right. Others reporting this week, and apologies if we're going through one after the other. I mean, there's just so much happening this week. Beth, Meta. How are you thinking about this?
Meta is a very, very interesting stock because, as you know, last year it was known for the year of efficiency. They really tightened their belt, margins expanded, greatly expanded. What we want to look for right now is, will Meta become a full-fledged AI stock? This will be shown in the average revenue per user. We're already seeing this phenomenal rebound. It was only 2.5% growth last year, this quarter, and it's going to be 25%. Especially in the United States and Canada. So they're basically using AI to greatly improve their average revenue per user. Eventually, Meta will become a full-fledged AI stock. When that moment happens, it could be quite bullish since ad tech is so incredibly cash efficient. You have that perfect combination where Tesla, with high interest rates, gets kind of kicked out of the Mag 7. Those with those large cash reserves, high free cash flow margins that could only potentially get better with AI will be greatly rewarded in the current environment we have with interest rates.
What about the impact on AI on Alphabet? I know they've come through with their AI strategy, but they basically have monopolized the search side of things. I mean, does the emergence of ChatGPT change that anyway? I know they fended off multiple threats in the past before. Is this time any different?
Yeah, so what we're seeing is even if search puts up a decent growth, the market is not convinced that AI is driving that. And if AI is not driving that due to lack of engagement on their AI products, then they just have many, many competitors on their heels. And we're talking obviously OpenAI, but there's a lot in the private markets that is happening right now too. So you'll see the market a touch nervous until you see that direct impact. And also on Alphabet, I would add, until Google Cloud starts to be very, very consistent in the way that Azure has been, and Azure re-accelerated over the last quarter, that's the other thing the market will want to see. If you're truly having an AI impact, you should accelerate from here. It should be consistent, and it can be quite lumpy. So until that smooths out, right now, Alphabet will eventually, again, be an AI player, but the timing is more difficult to predict because it's been lumpy. They've went from being a leader to now a laggard in terms of AI capabilities.
So Beth, all this being said and other things still, on the table right now, and given the drop we've seen over the last few weeks or so, tell us how you've been managing your exposure. What have you been adding the most? What have you been reducing? What are you excited about going into these other earnings reports, of course, too?
Yes, we continue to accumulate semiconductors at lower prices. As you know, last week was brutal for certain stocks, NVIDIA, of course, but there's other AI accelerators and companies that are contributing to AI data center. If we can get those at lower levels, we'll gladly take it. So we have been trimming any area that's not a semiconductor AI data center beneficiary and doubling down on those. You have many competitors to NVIDIA coming online right now. When I say many, I'm talking more around AMD, and then you have Broadcom, which is more in the custom silicon market. And then we also have this memory battle that's going on right now where AI accelerators are competing on memory, not computing power. That's very key to understand how 2024 will unfold. So there's some memory beneficiaries as well that are important. And I'm sure you talk about it on your program as well from South Korea. The United States happens to have Micron, and then there's equipment suppliers for the memory. There's a lot of stocks to look at in the AI data center, NVIDIA being the bellwether, but there's a few you can look at, and we are doubling down on those.